Is buying a house in 2026 a brilliant financial move or a catastrophic mistake? That's the million-dollar question on everyone's mind. For the past few years, the housing market has been a total roller coaster. We've seen prices skyrocket, interest rates climb, and bidding wars that felt more like a gladiator match. It's left a lot of us feeling dizzy, wondering if the dream of homeownership is slipping away. But what if I told you that 2026 might just be the year things start to look different? Today, we're going to dive deep into the crystal ball of real estate. We'll look at the key factors that will shape the market, weigh the pros and cons, and ultimately help you decide if 2026 is your year to make a move. This isn't about hype or fear. It's about giving you the real, practical information you need to make one of the biggest decisions of your life. So grab a coffee, get comfortable, and let's figure this out together. First, let's talk about the big one: interest rates. The Federal Reserve's battle against inflation has been the main driver behind those painfully high mortgage rates we've been seeing. When rates are high, your monthly payment goes up, and the total amount you pay over the life of the loan can be staggering. The good news? Most economists predict that as inflation continues to cool down, the Fed will likely start cutting rates. We might not see the ultra-low rates of 2020 and 2021 again anytime soon. But by 2026, it's very possible we'll settle into a more stable, more affordable range. Think of it like this: a 1% drop in interest rates can save you hundreds of dollars a month and tens of thousands over 30 years. That's a game changer. So the trend for interest rates is looking cautiously optimistic for buyers in 2026. A more predictable rate environment makes budgeting easier and homeownership more accessible. Next up, let's tackle housing prices and inventory. The story of the last few years has been simple: way more buyers than available homes. Now, this massive imbalance sent prices into the stratosphere, but the market is starting to rebalance. High interest rates have pushed some buyers to the sidelines, giving inventory a chance to build back up. We're seeing more homes sit on the market a little longer, and sellers are becoming more willing to negotiate. This is a huge shift. Now, are we heading for a massive 2008-style crash? Unlikely. The lending standards today are much stricter, and many homeowners have a ton of equity built up. What's more probable for 2026 is a continued market correction or stabilization. In some overheated areas, we might see prices come down a bit more. In others, they might just flatten out. The key takeaway is that the frantic buy-to-next pressure is easing. For a 2026 buyer, this means more choices, less competition, and more bargaining power. That sounds a lot better than the market we've been dealing with, right? So, with potentially lower rates and more stable prices, does that automatically make 2026 a great time to buy? Let's break down the smart side of the argument. First, buying a home is still one of the most effective ways to build long-term wealth. Instead of paying rent to a landlord, your monthly mortgage payment goes towards building equity in an asset that you own. It's like a forced savings account that also happens to put a roof over your head. Over time, as you pay down your mortgage and the property value appreciates, your net worth grows. Second, there's the stability factor. Owning your home means no more surprise rent hikes or notices to vacate because the owner wants to sell. You have control over your living situation. You can paint the walls whatever color you want, plant a garden, or get a dog without asking for permission. This sense of stability and freedom is priceless for many people. Plus, if you lock in a fixed-rate mortgage in 2026, you'll know exactly what your housing payment will be for the next 30 years, which is a powerful tool for financial planning. But we have to look at the other side of the coin. What are the arguments for waiting? For thinking that buying in 2026 might be a stupid move? Well, the biggest risk is always timing the market. What if you buy and then prices drop another 10%? That feeling of being underwater on your mortgage, more than the house is worth, terrifying. While a crash is unlikely, regional price dips are certainly possible. Another major factor is the hidden costs of homeownership. It's not just the mortgage. You have property taxes, homeowner's insurance, and the big one, maintenance. The roof will eventually need replacing. The water heater will break at the worst possible time, and the lawn needs mowing. These costs can add up to thousands of dollars a year, and if you're not prepared, they can be a huge financial strain. Renting, on the other hand, offers flexibility. If you get a new job in another city, you can just pack up and go when your lease is up. If the plumbing breaks, you call the landlord. For some people, especially those whose careers or personal lives are uncertain, the flexibility of renting can outweigh the benefits of buying. So, how do you actually decide what's right for you? It's not about predicting the future. It's about evaluating your own present. The most important question is, are you personally and financially ready? Forget what the market is doing for a second and look at your own situation. Do you have a stable income you can rely on? Have you saved up a solid down payment? Most lenders recommend 20% to avoid private mortgage insurance, but many programs allow for less. Do you also have an emergency fund set aside? This is crucial for covering those unexpected home repairs we just talked about. Your credit score is also a huge piece of the puzzle. A higher score will get you a better interest rate, saving you a ton of money. And finally, ask yourself about your life plans. Do you see yourself staying in the same area for at least 5 to 7 years? That's generally the time it takes to break even on the costs of buying and selling. If you're not sure, it might be smarter to wait. If all those boxes are checked, then 2026 could be a fantastic opportunity. Let's put it all together. Buying a house in 2026 is neither universally smart nor universally stupid. It's a deeply personal decision that depends entirely on your circumstances. The market conditions in 2026 look like they could be more favorable for buyers than they have been in years. We're expecting more moderate interest rates, more available homes, and less frenzied competition. This creates a window of opportunity. If you are financially prepared with savings, a good credit score, and a stable income, and you are ready to put down roots for the long term, then buying in 2026 could be an incredibly smart move to start building wealth and create a stable home for yourself. However, if you're stretching your budget to its absolute limit, if you don't have an emergency fund, or if your career or life plans are up in the air, then jumping into the market could be a risky gamble. The smartest thing you can do is ignore the pressure and the headlines and make a choice based on your own reality. So, what are the actionable steps you can take right now to prepare for 2026? First, get a clear picture of your finances. Track your spending, create a budget, and see where you can save more. Second, start boosting that down payment fund. Set up automatic transfers to a high-yield savings account so it can grow without you even thinking about it. Third, check your credit report. You can get it for free from the major credit bureaus. Dispute any errors you find and work on paying down high-interest debt to improve your score. Fourth, start researching. Look at neighborhoods you're interested in. Go to open houses, even if you're not ready to buy. Get a feel for what homes are selling for and what you can realistically afford. And finally, talk to a professional. A good mortgage lender can help you understand your options and get pre-approved, which will give you a clear budget to work with. A trusted real estate agent can provide invaluable insight into your local market. The more you prepare now, the more confident and successful you'll be when the time is right. Thank you so much for joining me today to untangle this complex question. I hope this breakdown has given you a clearer framework for thinking about your own home buying journey. It's not about finding the perfect moment, but about finding your moment. If you found this video helpful, please hit that like button and subscribe for more content designed to help you navigate your biggest financial decisions. And I'd love to hear from you in the comments below. What are your thoughts on the 2026 housing market? Are you planning to buy, or are you waiting it out? Let's continue the conversation. Thanks again for watching, and I'll see you in the next video.